All right. Good morning, everybody. We made it over the hump. We're on the downside of the week, and yet we still have a lot of data to get through, including more jobs data today, big jobs data on Friday, and we have Apple earnings. When I was newer to trading, I didn't quite understand why or how an earnings like just any random company would or could affect such a big market. Think about all the interconnected ways. But just Apple by itself, if you look at its supply chain, and I've used to have a printout of all the different companies, it's a very large list. And this is just one company with supply chain companies that are publicly listed companies. It doesn't even mention all the ones that may not be publicly listed or ones that may be outside of the US. It is a massive list for one company, Apple, all by itself. Then there's the way that the forward guidance is listed and listened to by other traders. So some companies really hold the weight going forward for how they see the marketplace. And oftentimes their forward outlook on the economy is taken with more weight than economists who come out and say what they think the economy looks like and how they think it's going to go moving forward. So when Apple speaks, you definitely want to listen. Over the years, I've picked up a catchphrase that I've heard from a number of places, the Bank of Apple. And that one's always been a bit interesting. And then, of course, there's the bonds that companies put out too. So with Apple today, Apple does have the weight behind it to move markets. Now, it's been running on a track record of revenue decline. And this morning on Bloomberg, they were quite cavalier about the idea that Apple would yet again have a lower revenue for the fifth time in a row. And they're already writing it off as Apple's going to miss, and that's that. But is it? Because we've seen a lot of companies this earnings quarter who didn't miss, had blowout, stellar earnings, and then got kicked in the face and watched the stock tumble. Things that have been riding at their highs that were lifted up for a number of reasons, but mostly anything connected with AI. Stock riding, 52-week highs and looking great, awesome earnings, and they're getting beat down. And companies that have, it's kind of okay earnings, not that great, but a forward outlook, a plan to turn it around and do better in the future. And they're having just absolutely amazing stock moves to the upside. So I'm going to do a little bit of work today, take a look around at Apple and some of its supply chains. I would not be so frivolous with Apple, right? I would not just dismiss them so easily today. You might be surprised if you try that. I seen some comments yesterday from people who said they seemed surprised that the market reacted so strongly when Powell said they had no interest in raising rates again. I think the comment was something like, wait, what? The market actually was pricing in a rate hike? And this is why everybody's now so happy because Powell reaffirmed that the market is not going to get a rate hike. You don't have to assume these things, right? Well, right now we're on a website, CME Group. This is free. It doesn't cost you anything. You don't even need to log in. You can just go to Google and you can type in FedWatch and find this page. It shows where the FOMC dates are for this year and then for next year in gray. There's all kinds of different ways you can change how this table looks. You can even see the dot plots, although that didn't change. And you can see if they are pricing in a possibility of a rate hike. and just go through all of these. And for all of this year, there is nothing higher than where we are already at. So the market had not been pricing in at December, for an example, 17%. That wasn't the higher base case argument, right? They had not been pricing it in higher. For November, they had not been pricing it in. September, what we are seeing is higher for longer, right? The idea that we will not be getting a cut. So when it comes to, are they raising rates? Are they, let me rephrase that. Is the market pricing in that the Fed will raise rates? Or is the market pricing in that the Fed will cut rates? You don't have to make this assumption on your own. You can just come over to this website and look. Well, that's okay though, right? That's why we do the morning briefing. I think a lot of people were surprised by the way that the market moved, but we don't have to be surprised by the projections of the market, what the market thinks the Fed is going to do. We don't have to be surprised by that because we have this tool. We don't know if Powell was going to come out and do that Jackson Hole moment. He could have, you know. We didn't know a lot about what they were going to do yesterday, but not raising rates pretty much wasn't on the table. And we can see that because of this. And that's why I wanted to point this out so that you never have to guess or assume. And what I always hated when I was newer is I would hear people say, no, don't worry about it. It's already priced in. What do you mean it's already priced in? How do you know it's already priced in? You know, what are you guessing? I want to see whatever you see so that I know it's already priced in. And that's where this comes in. I don't ever have to guess or assume that the market is pricing in a rate hike or that the market is pricing in a rate cut. I can just come here and look for myself and see what the market is doing. And make no mistake about it, they'll get it wrong. This is just the collection of what is being traded, and it's this contract, right? It's the the contract is listed on here somewhere. It's just showing you what's being traded. So, you know, they'll get it wrong just like anybody else. But it does show collectively what the market is trying to do. Are they pricing in that cut or not? And then we can see whether it's being unwound or not. When they get new information and the market decides to change its assumptions of what the Fed is going to do. So this is just CME Group Market Watch. If you go to Google and type in Market Watch, it'll offer you this probably as the top choice. And then you have this at your disposal going forward. Hong Kong is basically flat. We're going to get a little bit of data out of the UK, and then we have the S&P and all the other markets in the US up this morning, with tech almost up 1%. We're going to get data from the Challenger job cuts this morning too. I don't see it on this one, but we are going to get some jobs data. But the big one is tomorrow. There it is. And the numbers are coming in. Canada's got a rate decision. Looks like Japan might be closed. If they're going to have Constitution Day, that sure sounds like they're going to be closed. When it comes to that, by the way, you don't have to assume if a market is open or closed. There's a website called Trading Hours. And on this website, you can see markets that are open, markets that are closed, and you can click on that market, go to it, and see what time frame it uses around the world and whether or not they have a holiday, what the holiday is. This will let you know in advance because you can always keep track of markets if they're going to be open or not, if they have a holiday. Because I have a hard enough time keeping track of my own country's holidays, let alone some other country's holiday. I use this site a lot, and this is another one of those free sites that's just really very helpful. So trading hours, especially if you're trading in the overnight hours, if you like trading in Globex, you really want to know when Australia is closing and when Europe is coming online or when Asia is coming online, or whether or not one of those Asian countries aren't even coming online today because they're closed for a holiday. So trading hours, it's free. It doesn't cost you anything. And now that we are done with FOMC, we're also done with the blackout period. And I would not be surprised to see a lot of Fed speakers start to show up to talk about what Janet did, right? We ought to see a little bit of a discussion about the quarterly rebalance. Let's get more information or at least get some insight from them and listen for the consistent narrative, right? They all want to pretend that they are their own entity, but at the end of the day, they have to reinforce the narrative and sing from the same book. So let's see if they're going to walk back anything that Powell said and just get their collective take on things. And if you're not using AI, that is a really great subject to throw at AI. Let the AI go and gather up all their latest comments and statements and give you a report or a summary of what they've been talking about. Here's one for AI that you can do. Companies trading on the US exchange that are part of the Apple supply chain. Pretty awesome, right? And of course, this is not the Google one that's delayed by a year. This is the Microsoft one that has no time restrictions. So it is up to date. Although you got to check it sometimes. It'll try to give you old information. When that happens, just nudge it and tell it, hey, you're wrong. Look again. There's more current information, and it'll go back and look. It's AI, right? It's if then statements. You just got to nudge it a little bit once in a while. So it just provided a whole list of information there. And if I wanted it to, it very likely would break that down into into columns with spreadsheets, and it would do a lot more if I asked it to. But this isn't even the whole list, right? I asked it for publicly traded companies, but just like that. So if you're not using AI, try just do little things with it, a little bit at a time. Get more comfortable with it, more familiar with it. Use it. Get more out of it. So the challenger numbers are good. The month before we got this 90 print, it was 86, I believe. So we went up into the 90s, and now we're back down into under 65. So these are good numbers. And we're going to get more jobs data tomorrow, but I'm sure the market is interested in this. We'll see some impact from it. Someone was asking the other day about QRA and when it happens. It is a repeatable event, right? 4 times a year. And it's Monday is the first bit of data, and then Wednesday is the second bit of data. February, August, November, and what, I skipped one in there. May. February, May, August, November, and it just keeps repeating over and over. So if you wanted to mark these on your chart, you can just go back to, say, the November one. This is November 2nd. It'll be in the first week, and it'll be on a Wednesday in November. So it's not hard to just lay these lines out and then save them. FOMC, you might have to Google and get the dates. But on TradingView, there's a number of indicators that have the economic events already in an indicator, usually with a little table somewhere on the chart to show you, and it can do non-farm payrolls. It won't do QRA. I haven't found one for that, but yeah, non-farm payrolls, CPI, PPI, those sort of things. And then you could just turn the indicator on and off and see how those particular events have affected whatever market you want. This is useful if you're trying to find things to trade while you're worried about a particular event like CPI, PPI, non-farm payrolls, because not everything is affected by that, right? Just like when earnings seasons come around, oftentimes I'll go to an ETF and I'll go into commodities or treasuries, just something other than getting whacked by earnings. There's always something to trade, I guess is the point. But on TradingView, you can search for events, economic calendar events, things like that. You can find different indicators that will put those lines on the chart for you, showing the old ones. That's funny. So that's fair value, huh? What's max pain? Ask it that one. All right, so we got a pretty busy schedule, and we do have auctions today. Even if it's not showing an auction at 1 o'clock, just go ahead and assume that there's going to be an auction at 1 o'clock. Remember that we don't have every single economic data point listed. There's always a lot of data points that don't get published so easily. You can find them if you hunt far enough, but you would really have to hunt for it. In fact, the Thinkorswim, all of these economic events come from a company called Econoday. If you were to go and Google Econoday, you'll find their website, and they have a lot of the ones on their website that don't show up here. Usually it's more of on the agricultural side, but they're still economic events. And the one that I usually reference when talking about that is the grain shipments in New York Harbor. That one always just tickled me for some reason. I don't know why. Farm boy from Kansas, I suppose. But either way, there's always more than what you're seeing here, right? So we have an auction at 11, another one at 11:30, and I will be watching it at 1 o'clock on the assumption that there is an auction, even though I don't see it here. We've got the same amount of volume this morning as we did yesterday, so we're not out of line there. We don't have an MDP because we've already hit the daily pivot. We're riding reasonably well above VWAP, depending on when your VWAP starts. Anyways, I thought this did a better job of kind of highlighting that nice clean run that we had above VWAP. We were stuck on the halfback. Finally had that breakover. Didn't stick, so that's still the issue. Got to get over the halfback. That halfback that I measured is yesterday's range, right? Yesterday's high point to yesterday's low point, and the halfback there. That's what we've been stuck on. Still need to get through it. But while we're stuck here, really struggling to get through it. That VWAP's been riding up closer and closer. Now we're getting into a bit of a pinch. It's very likely that we're going to break this zone soon and go ahead and expand. We're really close to the upper ADR. It would make perfect sense for us to go ahead and get there first. If we get to the upper ADR early enough, then, you know, that kind of gives us license to go to the other side. So we could very easily make it to the other ADR by the end of the day. We don't really have that on the table. There's no reason to assume that we're going to break and go down from here. Just as a rule of thumb, if you get to one ADR very early, it opens the door to go to the other one by the end of the day. So we are through the daily pivot, so no missed daily pivot. We are underneath the weekly pivot point. That's a structure that we need to get back above. In the bigger picture, just being above the weekly pivot puts us in a bullish bias. We should be looking for long opportunities, not just in this market, but broadly speaking in the market. We'd want to short duration, short trades, short-term trades when we're above or below bullish or bearish. Right now, that lines up with the 10-day moving average, and that's really close to the round number, 5,100, and the 3-week moving average. If we can get through that, we have the volatility trigger, and then this 10-week and the 20-day. So we still have a lot of resistance overhead, a lot of things that we've got to work our way through. This chart is a weekly. You can see how we're still underneath both moving averages here. This blue one, it's the 10. There's two blue lines because there's an EMA and an SMA, and I left them looking exactly the same so that you'll never know which one is which, because it doesn't matter. And that's kind of the point that I want to try to prove to people. It doesn't matter unless you're actually trading a touch or a bounce. EMA, SMA, it doesn't matter. We're underneath both anyways. So even if we did want to distinguish one from the other, we're underneath them both. This does set the point that we gave a lower high. So if we put this on a daily for an example, when we were still running up, there was an argument that could have been made that we had not yet set that lower high since we hadn't pulled back from it yet. So in theory, we could have just continued to run up and never have set a lower high. It could have just ran right back up and broke out. That argument is now off the table, and this is absolutely a lower high. But we're still just in a complex topping pattern. We haven't broke this low, so we don't have a confirmed bearish trend in the market. And we don't yet have another lower high. If this is going to be a complex top, like it's already building out to be, then we're very likely going to set a higher high here and maybe set a higher low, but it won't matter. The one that I kept looking at that kept getting my attention was back here, where we had pulled back significantly, broke through to the moving averages, ran up, set that lower high, and then here confirmed it. If any argument was made that this wasn't a lower high, that it wasn't a deep enough pullback, then this one did. We didn't get an equal high. We didn't get a higher high. Instead, we left that as a lower high and pulled back, gave a higher low, and all of this was just a pause, some digestion, and then we broke out and continued. Until we break this low, even though this is a more violent example, it's still just this same example as back here. Until this low gets broken, it's no different than that. And so we do not have a confirmed, I wouldn't want to step up and get heavy bearish till we break that low. Once we do, then those two purple lines are the target. It's a 200 period moving average. we can always find examples from the past, right? When it comes to the S&P and the NASDAQ, we can't say that about equities all the time. So ES, looking back here where we had the August rollover and we set this lower high, then we broke that low, came down into the moving averages, got tangled up, and everything changed. So we've got precedent. If you ever want to see, what's the expectation, find examples of what you already have on the chart in the past, preferably for the same company, right? Don't look at something that Microsoft has and go look at what Google's chart and say, well, look, it's the same thing. I mean, you can, but you'd be better off looking at the market that you're analyzing. Find examples on that same market. So until we get this lower low, or we come up and break this high, we have to get out of this range one way or the other. We overshot it a little bit, but we are back above the halfback. $5,100 continues to be a major level, although I noticed this morning that the volatility trigger was the only thing really closest to that 5,100 level. I would continue to keep my eye on that put wall, see if they roll it up, or more my concern that if they roll it down. It's kind of what I've been watching for, see if they roll that put wall down. Ten-day, 30-minute volume profile continues to be relatively narrow. Throughout the rest of the week, we're going to lose this lower end of the profile. So if we drag this across just a little bit, it will look more like this by next Tuesday. Unless, of course, we break the high or break the low, which right now we don't have any reason to believe we're going to do either one of those, other than Apple and the job numbers. I haven't had a chance this morning to read the Spot Gamma Founders Report, but they did have it out very early this morning, which was nice. We don't get that all the time. But I would be interested to hear what they had to say about the options flows from yesterday. So we'll have more information as the day goes on. So this VPOC was hit. It's done now. Take it off the table. But we have a new one from yesterday. Just above 50-50. At this point, we can't see the TPO, but that volume up there yesterday was interesting. That was where the second yellow line was on the ADR, was up there. And you would assume that there's liquidity on the other side, but they front run it yesterday. And so most of the liquidity was in front of that yellow line, not behind it. There's that yellow line. So because of their front running actions, we almost didn't get to it, but it did get that last little hurrah, that little pop up, blow off top style maneuver. And then that was it. So we did get through the other side, but looking at that volume profile, there wasn't much liquidity on that, on the other end of it. The other thing worth noting is when we look at the structure of yesterday, where the point of control was. If you've gone through any of the TPO stuff and started studying footprint charts, TPO charts, profile charts, it talks more about the location of the bulk of the volume, right? That's why we focus on the alphabet, which letter it is, like a lowercase b with all of the volume in the lower end, or capital B, and then where the point of control is on either one of those, capital D, capital P. Now that we've got this structure underneath this, it needs to hold. So we could come back down and retest that, but we really don't want to get below that. And again, I still want to read spot gamma first, but I would say breaking that 50-50 and getting below yesterday's low would probably give us license to really get some moves to the downside. We are back in the box so far, and that's a good thing. Now we have to focus on getting to the upper edge of the box, which is not off the table, by the way. Generally, though, if we get to the edge on a Monday or a Tuesday, I like to take the other side of the trade. But the other side of the trade doesn't necessarily give us destination. It doesn't owe us the other side like the ADR lines do. It's more of the idea that we would come back up and get back in the box. Having said that, though, there's plenty of precedent where we get to the edge on a Monday or a Tuesday, and we make it to the other edge by the end of the week. There's plenty of examples of that. So if I did want to take a little bit of a lotto long, aiming for 5,200 on the ES or $51.70 on the SPX wouldn't necessarily be out of line, but it would be a lotto. There's no momentum, inertia, no reason to believe that we're going to go up there other than just we hit one side early enough in the week. That does offer the opportunity to hit the other side by the end of the week. $5.15 in SPY. We were doing guess where the market closes yesterday, because why not, right? It's just betting some cookies on it. My number was closing at 500. That's where I thought we would close yesterday. Missed it by 35 cents. Not bad. 2 peanut butter cookies and a raisin cookie. So how's that? Huh? I win. And for the Qs, be 440. All right, we're still showing below the 10-day on the ES. And we had a little bit of a pullback. We haven't had this sort of a failure to keep the 10 since last year around October, November. Now QRA is at the end of November, end of October, 1st of November. So this big shift from being under to over, that's where QRA was at. So it's not this one that we want to focus on. It's before that. And we can look back in the August, September timeframe where we came up and dumped back down, or through October, September, October, where we did it again. Very unlikely that we're going to stay below the 10 unless things get a lot more negative from here. So Apple's going to really shine some light on that. And even the jobs number at this point, I don't think that it's going to, unless it's way off its mark. I don't see that the job numbers are really going to introduce more volatility at this point for the week. Trying to consider what's the catalyst. And there was some discussion this morning that Bank of Japan intervened again. I don't have confirmation of that yet. But if you run a search for US dollar Japan on Finance Juice, it talked about the intervention for May 1st, how much money they think was spent. But if they just ran another one, it's likely just as ineffective as the first one if they're not getting coordination through other central banks and getting some assistance with this. Can't see that they're doing it on their own. All right, so we had some moves in crude yesterday. We broke a pretty key level. So we've been holding this zone for quite a while, coming all the way back to 2023. There was talk on the run up how it was going to be affecting everything, right? The price of goods and services goes up with fuel. And so this big breakdown is going to help change that narrative. If gold is a weight against the NASDAQ, then this big breakout and this big run that we've had in gold would have been a major weight against NASDAQ. But with this continued move to the downside, then it's taken that weight off, right? So another reason to look at the markets and consider that we could get that other higher high, right? Now, gold tends to get a little bit bid up on FOMC days, and yesterday didn't seem to be any exception. We did get that pop up, but we have set a lower low. So now we need to set a lower high and break this low and set another lower low. Just continue that trend to the downside. But we've already got two lower highs and, you know, depending on how you want to argue it, at least one lower low. Two lower lows and two lower highs, that's a full set. Full set's a trend, that's a move to the downside. Breaking that half back kind of gives us license for 2200. And Bitcoin broke some key levels, mainly that 60K, but it's up a little bit this morning. So this might give us something to at least focus on if we have Bitcoin proxies making moves to the upside. Nothing's down enough to meet our qualifications. We need things that are down at least 0.5%. Looking at things that are up, everything. I mean, that's pretty easy. Everything is up, starting with KWeb, or another way to consider it is KWeb is up the most. So those China ADRs, Baba, Baidu, JD, PDD, Neo, XPEV, since this is with China, the gaps kind of show that overnight trading. This thing is a gappy bugger. It's hard to trade. You got to have a gut of steel to hold on to this thing with all those big gaps all over the place. But it is a reflection of all those different markets. So with this being up this morning, and look at that pre-market gap. We're at 29.21. We closed all the way down here at 28. So, I mean, this thing is up this morning. Baba, same thing. It didn't just gap up this morning. It's up higher than the entire week, higher than the entire month, all the way up into this resistance, the top of this zone. Baidu is up as well, but not enough. Still inside the week. And I mean, that's still a significant rally up. But all of these lower highs and lower lows are still intact. Even this gap up this morning isn't higher than this high right here from April 29. JD also, and PDD as well. A lot of the names that we just looked at are like bottom fishers that are still under their 200 fighting just to, come out of that basing pattern. But PDD is a little bit different. It's already been making this run back up. Right? It's certainly doing a lot better than its peers. But this gap up, not really that much of a move up compared to some of the others that we looked at. Still collectively, the China ADRs are up. The Bitcoin proxies are up as well. We can see that through BITO. So Riot, red to green. Same thing with Mara. At least with both of these, Mara anyways. Start with that one. It's gapped up, but it's still inside yesterday's range. It's above the halfback. That's a good start. Needs to get outside of yesterday's range and really start expanding to the upside. We can use the close of this day because that'll be the gap fill. 18 for a target. So if we get an inside day breakout on Mara, we can run it to 18. That's not bad. Hut, Hive, Mara, Riot, Coin, MSTR, all of those should be up this morning. Get through the halfback of yesterday, then get that inside day breakout, and then target gap closes higher up. There's that, oh, what was it from Rob, right? It's a silly title that he has for this thing is shotgun pivot reversal. I don't remember. Funny named popcorn reversal. I don't remember what he calls it. The idea, though, is that if you think about where typical shorts would have their stops, all right, say you went short on this day, and your stop would be above that day's high. And then, more shorts like the look and they get in here and their stop would be above that high. And same thing here, and their stops are above that high. Then you get a big breakout, gap up, breakaway, and you start triggering those stops. Well, pivot machine gun. Thank you. Yes, that. I don't know why popcorn keeps coming into it. Maybe I'm just hungry. Pivot machine gun. That is the reversal name of it. So if shorts have a stop, the stop is to buy to close. Their buying to close adds to the buying, which fuels the breakout even higher, gets into the next level of stops, which adds it even higher, and into the next level, which gets it even higher. I didn't know all of that when I came up with my strategy, which is a trend line breakover, where we focus on breaking the trend line in a single day, making it all the way back to the top. I didn't really put the why into it, thinking about, the stops and assuming where others were at. I was just looking at historic precedent where you have a trend line and you break that trend line and you can make it all the way back to the top of a zone in a single candle, whatever that candle happens to be, daily, weekly, monthly, hourly, 5-minute. The TRB setup is a really, really good setup. It's one of my favorites. We have a TRB on a lot of these this morning on these Bitcoin proxies. We also have pot stocks also up this morning. So, collectively in groups, KWeb, so the China ADRs, BITO, so Bitcoin and its proxies, and pot stocks all up this morning. And we've got semiconductors up. So then we got our tech. So we've got small caps, large caps, tech, commodities. We see crude is up. We've got every group. Which means we have the capacity today for one of those days. One of those days is where we can get a runaway trend. One of those days where we go to the upper edge and we break both of the ADRs and we just keep on going even higher than that and higher and higher. And of course, everybody's trying to short it because, how high can you go? And it just keeps going and going and going and going. I love those days. Spent a lot of time and effort researching them. We don't get them very often. And of course, I call them trend days. They really need a different name because it just confuses the heck out of people. Anything that looks like a trend could be a trend day, just that for an example. But that's not necessarily the focus, right? So I don't have a better name for them yet. But when we have one of those days, we can really move. And we have all the ingredients right now. Everything is up. We don't have any more economic material for the day. Anything big though, right? Other than the auctions. Now we still have more jobs data in 10 minutes. We got to get through that. These factory orders can be an issue too at 10 o'clock, but if neither one of those derailed this move, we could get into one of those days, even just in the afternoon. It doesn't have to start in the overnight, which is where generally when we get one of those kind of days, it does start in the overnight hours, but it doesn't have to. We've even got agriculture up. So when we think of commodities, like crude and things like that, that's one side of it, but we've got ag up as well. We have finance, technology, consumer discretionary, crude, ag, Bitcoin, semiconductors. It could be a really blowout day, even if it starts late. So now that I've hyped it up and made it sound really great and kind of got everybody looking to the upside, let me add some warnings here. Because I already mentioned it earlier, but we want to reaffirm this. If we hit the upper ADR early enough in the day, it opens the door to the other side. That's just the way it is. Historical precedent. If I go back and find 50 times that we hit the ADR early in the trading day, I can show you at least half of those where we went to the other side by the end of the day, no matter how bullish or bearish the day was. Usually, though, if we're looking for a bullish move, we hit the lower one first, and then we make the bullish one in the afternoon. But the point is still valid. No matter how bullish or bearish we are, Brooks talks about how in the first 30 minutes, no matter how bullish or bearish, the market can change direction in the first 30 minutes with a 50% rate. That's literally a coin toss. No matter how bullish or bearish, we can change direction in the first 30 minutes of the market. It's between 9:30 and 10. So keep that in mind. That's a heavy statistic that weighs on me constantly. It's 50% coin toss, 50-50. So we're bullish. As long as we maintain above this VWAP, then that's not even going to be an argument. Just keep in mind that we want to see reciprocation for a healthy market. So whatever we've got here, at some point today, we're going to want to see it here. Just getting onto the other side of it. That'd be a really nice pullback to start the morning. Maybe reaffirm that low and then, take out that ADR, go to the next one, work on it for the afternoon and kind of expand up into 51 plus some by the end of the day. That'd be great. I don't really see an inside day breakout per se today, but if we do get all bulled up, then yeah, taking out that ADR after taking out yesterday's high, that's not off the table. On the other side of things, since we are looking for reciprocation, if we break reciprocation on the downside move and we go more than that to the downside, that should open us up to take out the Globex Open. I would focus specifically on that. The Globex Open, which is right here, this 50.57. And the Globex Open is not the same as the RTH close of yesterday. That would be another target even lower down at 4 o'clock close. Below that, the RTH low, and then below that, the Globex low, pivot by pivot by pivot. And it would start with if we get more than reciprocation under VWAP, because we shouldn't, right? If we're going to stay bullish, we should only get the equal amount. Whatever we had above, we should get below. Anything more than that, it's going to make me nervous and probably consider some shorts. Pivot by pivot, right? So break that one to get to this one, break that one to get to that one, on down and down and down. I'll leave you guys with that. We are crazy bullish looking at Bitcoin and ag and crude and China ADRs and semiconductors and finance and technology, and everything is up. Everything is bullish. Everybody be careful, be safe, watch the clock. I'll see y'all tomorrow.